Chart Watchers, and welcome to this Friday, January 25th, Market Watchers Live Show with your host, Erin Swenlin, and special guest co-host, Ellen McGonagle. For those of you joining us for the first time today, welcome to the show. We hope to have you return. And for our regulars, welcome back. All right, let's see what's been going on in the market and catch you up. All right. As you can see, markets are up today, looking pretty good. All righty. S&P is up. We see the Dow is up as well. NASDAQ, we're seeing some nice moves here on the Russell 2000 as well. But of course, when you look at these, the Dow is the only one that looks like it's breaking out right now. S&P 500, NASDAQ, even the Russell 2000, all trying to get above those highs we saw earlier this week. TNX Treasury yields are also up, currently reading 2.74%. UUP, the dollar, is lower today by 19 cents for UUP, 0.75% down right now. USO is traveling upward nicely. It is up almost 0.75%. Gold making a nice move, a breakout move right now today with GLD up 171. It's now reading at 122.80. Really nice breakout with the gap. We'll look at that chart a little more closely later. The VIX right now is moving quite lower. We're now seeing readings below 18. We're at 1761 for the VIX, which I find quite interesting today. Materials is actually the leader as far as our sectors go, with energy not far behind. GE is our biggest mover today. It is up almost 4% right now. I'll take a look at that chart later. But first, let's go ahead. I want to bring in Mary Ellen and welcome you to the show as my guest co-host, but you're always here on Friday, so I'm almost like the guest.
That's right. You're guesting my show.
That's right. I'm the guest on Fridays. For those of you who don't know, on Friday afternoons, Carl Swenlin and I do the Decision Point show at, let's see, 1:30 Pacific, so that would be 4:30 Eastern Standard Time. It's just a half hour, and we give you our opinion on all the stuff going on. So that's why usually I'm not here Fridays, but glad to be here this Friday.
Yeah, quite a week.
Wow. Indeed. All righty. Well, let's go ahead and get things started with our upcoming schedule. And it's going to be a good one next week. I'm very excited. Greg Schnell will be joining us on Wednesday, I believe. And we have my workshop, actually Monday, I'm sorry. And then I have my workshop coming on Tuesday. Dr. Elder is going to be with us on Wednesday. And I mean, what a great week. I'm very excited to talk to Dr. Elder. Today, we're going to do what's hot, what's not after our technical news. 10 and 10, we're going to start with Diamondback Energy. Symbol is FANG. So that'll be an interesting one to look at. And then we did this the last time Mary Ellen was here with me. We did questions and answers. So I'm not going to promise that we will get to every question. I can guarantee we will not. But go ahead if you have a couple of questions you might want us to answer at the end. Go ahead and put those in the chat room, and we'll give it a try and see if we can't get some of those answered as well. All right, but let's go ahead and jump in here. I am going to take you to some very interesting information here. Okay, so we do have what I'm seeing right now are some really great earnings reports, and I want to go ahead and look at a couple of those. As you can see, we have JetBlue. Starbucks came in way above expectations, as did JetBlue. Discover, not so much. ISRG, not so much. 296 versus 299. Colgate was up a cent there as far as earnings. AbbVie was lower, and that chart's not looking good at all, so I'll definitely look at that for you. And DR Horton reported just a little bit lower, 76 cents versus 78 cents that was expected. So let's go ahead. I'm gonna share the screen here and give you a look at some of these that we have today. All righty, and I'm just going to type them in right here and let's get going. Let's look at Starbucks first and see what's going on there. As you can see, a nice move today. We're getting a 3.5% move to the upside. Not a surprise when you see a pretty good earnings report there. Right now, though, it's getting ready to hit some overhead resistance. So I'd be just a little bit cautious here as it gets close to that $68 level and above to the $69 level. Be careful. But it does look good. You know, I've got the PMO buy signal. Looks pretty clean and it's continuing higher. It did bottom above the zero line. So it's still looking pretty strong here for Starbucks. The other one I was going to look at was AbbVie. There were no economic reports today, by the way, so I didn't just skip that. All right, AbbVie, not a good chart right now, and you know it's not totally surprising with them coming in lower. You know what I'm seeing here, I think we got some warning here, and I would say a couple of reasons why. You know, we went up here to that $90 level and we continued to not be able to really get ourselves above it. And when we hit the 200-day EMA this last time, we fell back. We had the PMO starting to turn. There were a lot of things going on here that I wouldn't like if I were to see it. Some people might have said, oh, but there's a double bottom, right? And no, because that's coming off an uptrend, and those are reversal patterns. More than likely what we had, as you can see, was a triple top. We got the triple top. It unfortunately broke below the confirmation line with that big gap down. But there is support lying here. Looks like, well, back at about 76, somewhere in there. We do have some support, but I would be looking for it to move lower at this point. All right, let's go ahead and I'm going to go to the members dash because I want to show you our sector summary. And actually, let me show you the Arthur Hill used it this way, and I think this is probably faster anyway. So if you go to that tab, Charts and Tools, come over here to the right, there's our sector summary. So let's start off by looking at the sectors. And as I said, materials and energy, certainly the leaders today, which was very interesting. XLP and XLU, those defensive sectors, as well as real estate, healthcare, they're actually on the bottom of the list today. So we don't have the really aggressive sectors leading, like the tech sector, financials, discretionary. These are sort of that mid-range, I would say, as far as you know, they're not really super defensive. They're not really aggressive. They're sort of those middle of the road ones, in my opinion. And you know, right now we're seeing materials leading. I'm going to go take another look here, and we'll look just a little bit at the different industry groups here in materials. And right now you can see that non-ferrous metals and aluminum are leading. So just something interesting to look at. In the non-ferrous metals, if you go in here and click it, it gives you the various symbols and companies that are listed under non-ferrous materials. And the two big ones obviously are Centrus Energy and Ferroglobe. So I'll look at Centrus Energy really quick here, and then I want to go over and look at some of the top 10. And then I'm also going to give you a little bit of a preview on what we might see today in the Decision Point show. All right, well, this is a very low volume one, so I'm not surprised to see these spiky moves, and it's a low dollar amount. This is one I think we didn't talk about this one, but yesterday I think Arthur Hill and I were looking at some of these low volume, basically not for the faint of heart. As he said, if you have money that you don't mind losing and that you can hang in there with all of the volatility, go for it. For me, looking just at this chart, we are in overbought territory and it's heading up very quickly. I'd be worried about sort of a parabolic move here. You've got overhead resistance at $3 that has been holding really pretty well. We got a spike, but we never closed above it. So one to watch out for if you were interested in going that direction. All right, let's look though a little more closely at the S&P 500 because we're always interested in that, right? All right, some good news and bad news, right? This is one of the reasons why I don't like when you get wedges or there's certain patterns, triangle patterns. When you start to get really close to the apex on these, you can actually get the quote unquote breakdown with just a drift sideways, with movement to sideways, which is what I'm really seeing right here. Um, we're getting the move to the upside today. We haven't gotten to that declining tops trend line. And 2675 seems to be the short-term problem right now. If you look in the thumbnail, we're talking very short-term. But nice move, right? Gapped up and we are moving higher. So I like that coming off of, this decline. And I'm not really, again, I think that when you look at our climactic indicators, and right now, knowing that the VIX has traveled as low as it has, we still need to get higher, though, for it to hit the top of that Bollinger Band. But originally, when I looked at this, we had everything turning over. We'd had all of our breadth moving to the upside, and then we got a spike to the downside. And what I do when I get those is I go and look at what has the market been doing up until then. And at this point, that was our first down day. And so my sense is when you get those climactic readings to the downside after a move to the upside, you should expect the next day or two to get some downside movement. Now, we didn't get much in the way of warning yesterday that we were going to get this nice move to the upside with our breadth. So it wouldn't have been super helpful then, but you can see that it does tend to follow through. And, as we get the VIX lower and lower, and if we get lower than what we saw earlier in this month, I would be looking for that's when I would look for that big leg to the downside. People are starting to already get a little more complacent, a little bit more comfortable, and that is when you start looking for the boat to start taking on water. So I am still very bearish. I think, Carl and I both are. And like I said, we'll be looking at some of these charts. And on Fridays, Carl, my dad, he does what we call the big four. He does oil, bonds, dollar, and gold. And so he's going to be giving you his opinion on where those four are going. And again, that's 4:30 Eastern time for the show. It's only a half hour. It's a great weekly wrap up. We do all the weekly charts and have our discussion. And then we go over these indicators. Now, one of the interesting things I noted was when we were moving lower here from down, we came up here, right? This would be the move when we topped out in overbought territory. But notice we continued higher and the oscillator was moving lower. That really is, you've got these declining tops and rising tops. That's not a good thing to see, and you should start to expect some down move at that point. Right now we are heading lower, and we are in somewhat overbought territory. I really am not looking for this to turn into anything big right now. I think this is what they call a bull trap. I think we're sucking in a lot of people, and that's the time that everybody's going to start selling, is when the small time, the regular investors, I'm not going to say small time, but regular investors tend to be like, I'm missing out, I need to get in. And so they start to push things upward, even though things are overbought. And then that's when usually you see the bottom fall out. So, Carl and I have talked about it. We are in a bear market, but we could still come up here to that 2,800 level and head right back down. So, we are getting this move to the upside, but it hasn't convinced me yet. All right. I think that about covers it for the technical news and headlines that I wanted to cover. And Mary Ellen graciously agreed to do the upgrades and downgrades. So she's going to look at a couple of those.
Yeah, that's right. And the names I'm going to be covering today, there really weren't a lot in the way of upgrades and downgrades, but I'm going to focus on some of those larger, better known stocks. And let me go ahead and share my screens so that you guys can join in. And a lot of it, the work, of course, this week is going to be earnings related. We're getting into the thick of earnings season here. And this first company is Rockwell Automation, ROK. They're an aerospace defense company, and they are an upgrade. They were upgraded from reduce to buy, HSBC. And we can see the chart is still attempting to reverse the downtrend that we experienced back here, of course, toward the end of the year. So we're forming potentially the right side of a base. The stock has been able to break up above the simple moving average. The green is the 10, red is the 50-day. So this nice gap up here on the upgrade is significant, but we do want to see how the stock behaves here at the 200-day. If it's able to break up about above there, we should be in much better standing as far as the advance continuing. Another defense-related stock is FLIR, and that's FLIR Systems. And this stock was also upgraded, and it was from a neutral to an outperform. And we can see this is another stock attempting to reverse its downtrend here. Same position up above these key shorter-term simple moving averages, nice gap up. We could very well here see an advance from 46 up to that 52, which is that 200-day simple moving average. Your MACD poised to turn positive, and your RSI already is in positive territory. And then one other upgrade is CCL. This is Carnival Cruise Lines, and this also was upgraded from a neutral to outperform, and we can see just how much trouble this particular stock has had. They've had issues, certainly headwinds with oil pricing. They've had a recent outbreak of an illness on one of their boats, but here we can see this very sharp V-type reversal attempt. And the stock is now above that 50-day simple moving average. RSI and MACD are both positive. So here we could see a rally up to that 200, but overall the trend in this stock remains down. Let's go ahead and take a look at some downgrades. The first one is going to be very earnings related. It's Intel, INTC, and the company did come out yesterday with their earnings. Three different firms came out and downgraded the stock. Their earnings were in line, but their revenues fell short, and the company guided lower for next year. So that is not good news. The stock's down 6.5% today. And then one last stock, also earnings related on the downgrade, RMD. This is ResMed. This is a sleep aid products company, and they came out with Q2 revenues that were well below estimates, and that was after the close yesterday. Take a look. It's down 17% today. Goldman and JP Morgan both came out and downgraded this stock. And those are the names that I have to review for you today. And we can also take a look going back, and in fact, we can, while we're here, because I do still have a minute, is take a look at this gap down on ResMed, RMD. We're looking at a daily price chart, and you can see that I've overloaded.
Mary Ellen, we've got our summary slide up, so we can't see your.
Oh, that's fine.
Can't see your chart.
We're good. Okay, next time I was going to how to play a gap down.
Well, you could certainly add that to the beginning of your what's hot, what's not.
Sure, I can jump right into that. How about that?
Yes, exactly. Looking forward to it. Yeah, I'm curious to see what you think. Our poll is running, and it is asking you to determine what is hot and what is not. So go ahead and take that poll, and we'll take a look at that after Mary Ellen's segment.
Okay, so we can certainly, as mentioned before, a lot of the what's hot, what's not, similar to a lot of what we are going to be covering today, is going to be earnings driven naturally. And we're seeing a lot in the way of earnings surprises that is really driving a lot of this market action that we're seeing this week, which is generally constructive. Just a quick second, RMD, I mentioned I would talk about that. We did have this 17% price cap down, and we can see that the RSI is in that oversold position down here. So I would take you back to prior periods when the stock really got beaten down and what to look for as a potential turnaround. And then also the MACD, it's not quite in negative territory yet. It's not poised for this type of a turnaround, but certainly the stock's price now relative to these key simple moving averages, it is a bit overdone. So oftentimes from here, what you can do is go ahead and just take a quick peek at an intra-day chart, and this is going to be another way to guide you toward very short-term, near-term sentiment on the stock. We can see it's very oversold here, and you would look for some sort of bounce at some point, but you're going to want to use those same key metrics and indicators that you use on your other charts looking for this type of turnaround. You're not going to want to get back into an RMD. It's from my work, it's not healthy. I would not get into it, but for those of you playing this gap down, you would look for these indicators to trend positively before entering. So let's go ahead and move into the what's hot and what's not today. An awful lot to cover. This is a week where, again, we have a lot more on the way of what's hot. And that's been over the last, we're going into the end of the fourth week of a generally bullish market. So I'm going to start with a name that we started last week on the what's not side. And let me go ahead and pull up a daily chart here. This is PCG, and it's
I think we're pretty familiar with that one here in Southern California.
Yeah, it's out here. It's in the news. Erin and I, of course, are out on the West Coast, and we're always getting updates on what's going on. Are they going bankrupt? Are they not? Are they getting financing? So this, of course, is PG&E Corp, the utility company that is getting really hammered with the number of natural disasters out here. And they were poised to get federal funding, didn't come through. Were they going to go bankrupt? They came out with good news yesterday. And you can see on that spike yesterday, the stock was up 75%. So it really did get down to that $7 mark. And today it's giving back. It's about 13%, highly volatile, very, very headline news driven. But of course, for this week, this is going to be one of the biggest, certainly biggest moving stocks. Let's go ahead and move on and take a look at some of these sublining industry groups that are really outpacing this week. And the very first one would be semiconductor stocks. And this is truly all about the earnings. For those of you, let me go ahead and pull up the semiconductor index just to give you a feel for what this group has been through. This is a leading area within technology. I'm using SOXX ETF, and we can see that by and large, the semiconductors topped way back in April, and they've had several rally attempts. But more recently, this is the action over the last 2 days. This will give you a sense of really how depressed some of the underlying stocks within the semiconductors are. And so any type of good news, they're being bid up. But the first stock I'm going to show you is Xilinx, SLNX. This is one that did not get beaten down. This had been very, very constructive looking. We're looking at a daily price chart of Xilinx. The stock gapped up yesterday 13% on strong earnings and sales. And upon this yesterday, 12 Wall Street analysts raised their price targets for the stock, and we can see it's advancing further, 2.5%. The company provides chips for data centers and 5G wireless networks. And these are two very, very hot areas as far as in the economy, these telecom companies setting up their 5G networks and the need for these data centers. So this is one of the best performers and certainly one of the best names in the semiconductor space. Another stock in semis, LRCX, we can take a look at this. These guys also came out, they beat their estimates. Management also guided higher for Q3. So the stock had been down. If we take a look at this peak to trough, it had been down 45%. And then we had this attempted reversal attempt here. But of course, this action over the last 2 days is all about the earnings. Still have a ways to go to reverse this downtrend. At least a very decisive break above this 200 would certainly go a long way. Another, I'm focusing primarily on these bigger, better known names. This is TER, ticker symbol Teradyne. And we can see that they had a gap up, again, earnings related. The company did come in above estimates, but management really didn't guide a lot higher going forward. So it's a bit tepid, but the markets are shrugging that off. And again, still not there as far as reversing their downtrend. We're going to need to see a break above that 200-day simple moving average with volume to give us a sense that we could advance further from here. STM is another semiconductor stock, and these guys came in above estimates, and but they also guide it lower for next year. But again, market's shrugging that off. Another 5% gain today on top of yesterday's 7% advance. And we can see this green line is your 50-day simple moving average crossed up above the red. That's your 50-day. And that is a golden cross, rather bullish. And we get a sense here the stock's at 16. We very well could easily rally up to this 19, which takes us to the next possible area of resistance, this 200-day simple moving average. But we can see the RSI is positive, trending upward, just approaching that overbought. So you'll want to keep an eye on that as well. And then one last name that we can take a look at. This is a smaller stock. And really just to show you, if you pay attention, this is a bit daunting looking. This is not earnings driven. And I can take you over to the weekly just to give you a little more of a aligned feel rather than that sharp uptick that we're seeing there. And this particular company, they provide memory chips for telecom, networking, and for the military. What happened is they came out in January, they guided higher for this quarter and next year, and the stock has just been galloping ahead ever since. They are due to report January 31st. But more to give you a feel, when you see these stocks trying to reverse their downtrends, you want to see the breaks up above their key moving averages. And then from there, it is freer to advance higher. At some point, if we get above this recent high, even though the stock has already advanced significantly, it could very well may have more upside. Now, I'm not going to leave technology without reviewing IBM, because this is a company that did come out with very good earnings earlier in the week. And I'm going to go ahead back to that daily price chart. And what we can see here is this gap up on those positive earnings. The company, they repatriated money that was held overseas last year after Trump allowed that with that tax break. They're also, management talked about their purchase of Red Hat, which is a very large software company, and how they're going to help with their profits for this year. So guiding higher for this year. But IBM is right here at this downward trending 200-day simple moving average. So from my work, I would need to see a break above that before turning bullish. And we are super close to that. We can see the RSI is trending upward. The MACD down here is also above this net neutral zero in positive territory. So let's go ahead. We can move on and take a look at another area that is doing really well, and the financials. And I'm not going to go through and look at all of the names, but I will tell you that last week we had the large money center banks reporting. This week it was all about the regional banks, a lot of SNLs, really a ton of these companies reporting. So I'm just going to show you a couple of examples. This is UCBI, United Community Banks, and we can see the company did come out with strong earnings. This is your large price improvement there on that earnings, and had already been attempting to reverse. This is what we saw in response to last week's positive earnings reports with larger banks. So in an attempt to reverse, a lot of these stocks are very deeply depressed. Any kind of good news, they are responding positively, but very similar in the way of dynamics as far as you're breaking above these areas. You go back historically, you can see these other reversal attempts were met with resistance at these downward trending simple moving average. Now we've broken up, so that's near-term positive. but not quite yet are we out of the woods. We need to break above this 200-day simple moving average. Near term, the stock is overbought, and you can imagine after 4 weeks of an advance, it is going to get into an overbought position. But again, still trying to reverse that downtrend. Take a look at a couple of others. GSBC is one of many examples of these smaller regional banks that are coming in ahead of reduced estimates, and the stocks are responding positively. So here's that gap up yesterday on the strong earnings, but overall your downtrend in many of these banks are very, very much still in place. They still have work to do before turning positive. But again, if you were to look at a list of companies that reported this week, you'll see a number of these really beaten down, quite unattractive banks, but they're gapping up 5, 7, 8%. So that's on the financial side. Let's go ahead and take a look at some consumer related on the what's hot. And what I wanted to do is point out a couple of companies that are kind of interesting. This is LRN, and it's K12. And the company did come out and report earnings on Wednesday. And in that report, they cited 79% year-over-year growth in their earnings, and all of their metrics, they were above estimates. So we can see this big gap up. It was up 18%. It's giving back a little of that today. But this is a company that provides online educational services, and their big move this year was into public schools. They're working closely with public schools throughout the US. It's being well received. So the stock analysts are raising estimates on this one. One other educational stock is EDU. This is a company based out of China. They provide Chinese language training not only in China, but also in the US. Big gap up here on earnings, 56% year-over-year growth. And they were 300% above estimates on this report. So we can see this big downtrend, certainly in line with the markets in China, hit a bear market, attempting to reverse. So we're just now potentially breaking back above this 200-day, which could in fact precede further advances. And on the positive side, let's go ahead and take a look. There's one area that was really hot in the consumer space, and I got a little bit of a chuckle as far as uncovering potentially why. The first company we can pull up is QSR. This company owns, the name of it is Restaurant Brands International, and they own many locations of Burger King and Tim Horton, actually 24,000 locations. As some of you may recall, Trump held a reception at the White House for the Clemson Tiger. They won the National Collegiate Football, and he had a huge spread over 300 types of, well, not 300 types of food, but a lot of food for these football players. And it was all fast food. It was all Burger King, McDonald's, French fries, and pizza. And so there was in the news the fact that the spike, or the event, actually really improved the visibility for a lot of these fast food companies. But this first move or company that we're looking at here, QSR, this is actually because the company came out and they pre-announced their Q4 earnings in positive fashion. And from there, analysts went ahead and upgraded their price targets for QSR, and it was up 11% into today. Let's take a look at some of those other fast food restaurant stocks that are up this week. This is Papa John's, and it's giving it back. It's down 7% today. This is actually a very good example. It was up only 6% yesterday. This was on buyout rumors, and I can't confirm, but I'm guessing that the buyout rumors are behind us, because there was thought that QSR, the company we just looked at, was going to be buying out Papa John's. So this is a prime example for two things: why you would not buy the rumor, because this spike yesterday was on pure speculation that there was a buyout. But also take a look at your moving averages. This 50-day is in a downtrend. Stock attempts to rally up to that, cannot break through. So two different lessons here, if you will. unintentional, but worth noting. Let's take a look at Wendy's. This is another fast food burger joint. And this stock was up almost 6% yesterday. And analysts are citing the expansion of their menu as growth prospects are improved, and we can see the stock has broken above all of these simple key moving averages. Your RSI is positive. Not a stock I would get involved with, if you will. This type of break is indicative of a number of names in the market, but we're still not out of the woods yet. As far as breaking out to new highs would be a little bit more compelling for me. We can't leave this section without taking a look at McDonald's. This was the most prominently shown company as far as their products during that smorgasbord that I mentioned to you at the White House. But more importantly, McDonald's is doing quite a bit in the way of their menu expansion. They had an offer this week, a free bacon burger offer that was really well received. But take a look at this for this large cap stock, just now poised to break out of this 3-month base. Very, very constructive. And one other name we can take a look at is CMG. This is Chipotle. And JP Morgan came out and raised their price target for the stock. And it has since now broken out of a 5-week base, which is very, very constructive. We're looking at a daily price chart. RSI is positive and your MACD is positive as well. I only have one other area I can have time for here on the plus side, because for time purposes, I'll need to go ahead and review what's not hot. But we can take a look at some of these defense-related stocks. HXL is the first one here. These guys came out with earnings. This is Hexacorp, and their numbers were 17% year-over-year earnings growth on the stock, and we can see that it gapped up yesterday 6% on the news, and it was on positive volume. Analysts are revising their earnings estimates higher for this year and next. So we can see it's broken up above that 200-day simple moving average. RSI and MACD are positive. So this one does look to have legs, could have more upside. TXT is another defense-related stock. Earnings driven, 55% year-over-year earnings growth, and it was 50% above estimates. It did break above this 50-day simple moving average, but boy, does this stock have a lot of work to do to repair these damages. The gap down, a lot of your trends are down. So not quite as compelling on this one. Let's move on to another hot area. It's transports. This also is going to be earnings driven. The first one is a trucker, CVTI, 78% year-over-year earnings, above estimates, record revenues for the company. Earnings were a little bit weak, but again, a lot of more work on the reversal here as your trending lines, moving averages are still downward. So this one would not be so compelling to me. And then we can take a look at some airline stocks also in the transportation space. This is Southwest Airlines, 52% year-over-year earnings. The company is opening the routes into Hawaii, expanding their services. We can see it broke up above this 200-day simple moving average. It'll be interesting to see if it's able to retain this upside momentum. And with that, I'm going to go ahead and move on to just take a look at one name in the healthcare space that is hot. This is Waters Corp, and we can see this big gap up here relating to earnings. And what the company does is they create measuring tools for scientists, and their big growth on this earnings release here is in pharmaceutical related companies that need their measuring products, their precise equipment. They've also moved into China, and that's been a big growth area for them. The company's products are also used by biotech startups. So you cannot essentially start a biotech or any kind of new drug discovery processes without the products for this company. So it's gapped out now at a new high. And after a bit of consolidation, we may well see more upside with this particular company. So let's go ahead, and certainly we have things to discuss on the what's not hot side. And interestingly, not all of these are going to be earnings related. Certainly some of them, but let's go ahead and move. The first one is going to be internet content. There were a number of stocks that got hit here. And the first one we can take a look at is Twitter. And this particular company, and actually it looks like it's gaining some today, up almost 4%. But yesterday, through yesterday into yesterday, it was down almost 8%. And analysts at that time were revising estimates lower for this year. So it is having a bit of a rebound, but we have work to do before it's able to break back above these simple moving averages and potentially turn positive. Zillow, another internet, these provide insight into homes, pricing, and so forth. Take a look at this. We can see that this trend is very, very generally down. Interestingly, it's another one that's up 4% today after being down almost 9% for the week, but again, still quite a bit of work to do before reversing. The next couple of stocks are going to be Chinese ADR related internet stocks. This is BITA. These guys provide information about the auto industry, and the estimates are down not only for Q4 but for this year. So this is just trapped in this ever so long downtrend. SFUN is the next company. This is Fang Holdings. They provide real estate marketing and listing info similar to Zillow, but it's for the Chinese market. And we can see that the stock has been trending downward beyond its attempt to reverse this downtrend. So a number of internet related, Sina and Weibo are two other social media Chinese related stocks that are also suffering this week. Sina down 11% into the close yesterday, and estimates are being revised down. So super, super long. China has been in a bear market, and they are suffering. Let's go ahead and move on into another area that has not been hot this week, and that's going to take us right to consumer discretionary. And some of these retailers, will start there. This is a company, it's called Boot Barn, and we're looking at a daily price chart. And this too is up nicely today, up 4% with today's rally in the broader markets. So what I'm pointing out here is this downtrend reversal. This was a big winner last year. A lot of solid earnings and sales growth, gets hit with the market, attempting to reverse, but it is a bit trapped here, finding resistance at this 200-day simple moving average. Your other metrics are quite positive. A break above that, of course, would bode well. Fossil is another retailer, watch primarily company, but leather goods. And this stock also is attempting to reverse a downtrend that's even a bit longer. And I would argue that this downtrend is more than just market related. Very well could be fundamentally driven, and the stock still has a ways to go before reversing. Another big retailer is Macy's. These guys had a tough period. This gap down, they had a very not great holiday season earnings, or solid earnings. I'm sorry, solid sales during their earnings holiday period. So we can see after this gap down, the stock is still trying to reverse and struggling a bit here, similar to my tongue and mouth. But anyway, let's go ahead and look at some of these smaller discount retailers. This is Tuesday morning, and it's just a beaten down stock. It's down again this week, 7%. SMRT is Stein Mart, and we can see that this particular company is another one that peaked well before the broader markets. It's attempting to turn here. Your RSI just about poised to turn positive, but this is a stock is only a $1 stock, and it's not one that I would normally trade in. So from these discounters, let's go ahead and move on and take a look at some healthcare stocks that really got hit this week, and that's going to be MNKD, Mankind. And this particular company, it would help if I pulled it up, the ticker, MKND. And this company actually had analysts were revising estimates down, and it did get hit in line with that. And let's take a look here. And it's not liking it, but that's fine because we certainly have a lot of other names that we can take a look at. INSY, this is another medical company that is
Yeah, just click that little symbol there next to underneath. You can see the IS, right? Yeah,
Thank
just
you.
click there. There you go. You got
Didn't see it. It wasn't quite big enough.
it. Trust me, I understand that.
Yeah, so let's take a look. The stock is very, very much in a downtrend, and that downtrend is continuing. What's happening here is estimates are being revised downward, and the company didn't even make it up to that 50-day simple moving average in attempt to reverse its downtrend. One other area, and we're still good for time, which is a good thing. But I did see, in looking over the markets and reviewing what's hot and what's not, there was an area that really was getting hit. And let's take a look, because it is going to be global related, certainly related to emerging markets, the dollar, so forth. This is MTW, and it's Manitowoc. It's a farm equipment company. It's also been impacted by the tariffs. And so we can see, interestingly, the stock into the close yesterday for the week was down 7%. But take a look, it's up 5% today. So we're seeing a little bit in the way of bottom fishing. And what we can do from here is I'll very quickly go into an intraday and show you how you might be able to spot this kind of potential bottom fishing, if you will, where you're looking at this RSI. We're looking at a 1 hour price chart, and you can see that the RSI did turn positive above that 50. And for the moving averages, I'm using 5 as the green, red is 13. So we see this break up above it. It's not a play I would normally look to, but if you are, you could potentially be on the prowl for this type of move where the stock hits a bottom and advances, in this case for almost 2 weeks as it came out of that downtrend. So that is one example of the farm equipment stocks. Let's take a look at a couple of others that were getting hit, and we can take a look at TEX. And let's see if we can get out of here and take a look at this particular company. This is also in that farm equipment. They also do commercial vehicles. And let's see if we can pull up a daily on this particular chart so we can get a little more in the way of an idea of where we are with this particular stock, because it's another one that is very much in a downtrend. But take a look, it's rallying 3% today. And so this one could be a little more interesting as far as the ability to advance. So if you were inclined, go to that intraday and get a little more as far as perspective on the potential very near-term prospects for the stock. This is AGCO Agco, another farm products, and take a look, it's up 3% today, really making up most of that 5-6% downtrend into today. And this is another one that would be more interesting to me, because as it's at 63, if we were able to get back up to that 65 and above, certainly more upside potential. You don't have anything in the way of overhead supply to hold the potential advance back. Your RSI is positive, as is the MACD. So our time is ticking down. So I did want to get to a couple of other areas that were down this week. And this is another area that is in line with the heavy industrials, and this is machinery stocks. FLOW is the ticker, and this is one also where the estimates are being revised down 4% into today, but it is also seeing buyers. It's up a little over 2%, so it'll be very interesting to see if it can advance further. Because it's interesting that we are seeing these beaten down industrial cyclical stocks potentially finding buyers, trying to find the bottom in here. This is RAVN, Raven. This is also similar. The stock pulled back. Estimates are being revised down for Q4 as well as for the year. But the markets are, in essence, ignoring that. The stock is seeing a little bit of a 2% bounce today, not quite as high. It looks as if sellers came into its earlier advance. We are looking at a daily price chart here. ITW is Illinois Tool Works, another industrial company, and we can see this is one that was down about 4% going into today, and it's also seeing buyers, but not anything vibrant. And then the last one we can take a look at is CMI. That's Cummins. And this is also an industrial. They provide engines for heavy trucks. And this is one that is also seeing a little bit of buying into the weekly close. It was down 4.5%, but not superly dynamic here. This is not a company that would in any way attract my interest, because we are still bouncing around in this down and out area. And most of the stocks that I just reviewed have analyst estimates that are revising their prospects lower. A lot of that could have to do with the prospects for global growth. IMF came out earlier this week and reduced their outlook for global growth. And many of these companies that we just reviewed on the downside do their sales are guided globally.
Wow, you just covered that so quickly. I've decided I'm going to give you a break and I'm going to do the full 10 and 10 so you can get a glass of water. Want to go check out the chat room? That's fine.
Oh, that's funny.
But yeah, here's the summary of all of what Mary Ellen just went over. And then I thought we'd bring up that poll. Let's take a look at what people think as far as what's hot and what's not, and see if anyone cheated. So what's the correct answer? Answers.
Okay, yeah. As far as what is hot this week, we did review the some airlines. There were a couple of retailers, but most of them were not hot this week. And defense related would be the winner.
I picked both of those.
Oh, you're a winner. You're a winner.
Yes, yes. I know the semiconductors are trying to make a.
Oh my gosh, I'm so sorry. I didn't see the semiconductors because it was up at the top. That is very clearly, and it was in blue. So forgive me. Semiconductors buying away and hands down.
All right. Yes. See,
big winners this week, you guys.
Excellent.
Yeah, so good call on that.
All right. Excellent. All right. It is time for that 10 and 10. So I'm going to go ahead and grab the screen and get started with that. I did have a chance to get through and see all of your requests, so I'm just going to go right down that line. Here is the RRG, though. I usually do show this, so we'll start off there. And, you know, I have to say 1 week, and I really wish we had had time to show the RRG, but I think it was like Tuesday, all of your picks, almost all of them looked like this, these blue ones moving up and to the right. It was almost like everybody looked at an RRG to pick out what stocks they wanted to look at. Today it's a little bit more mixed. So as far as our industry groups go, we had One Energy, technology and consumer discretionary. They tend to always be in the lead. People always seem to want to see those. So. But I'm going to start with the one that we are doing today. And that is actually, I'm going to add
FANG?
Yes.
Very good.
Bang. Put it in here since I didn't, because I knew we were going over it. And that way I'm just going to use these to make my annotations. All right, here's the first one, FANG. Let's go back here and make it a little bigger. All right, so first of all with FANG, and I'll go first right into annotation. And my auto support resistance, I know that Tom and I both go right to this. This is kind of our go-to. And sometimes I do like I'm going to do right now and make it a little bit more opaque, because I see it as kind of a zone here between about 105 and 110 almost. I would say that's the area that is support/resistance. And we had what looked like a possible flag formation in the short to intermediate term. But now I'm starting to see a little bit in the thumbnail anyway, oh yeah, we'll keep it thick. So here's, oops, I don't want that. Okay, here we go. I need this one. All right. So here's that flag right here that I was looking at. But now I'm seeing, and I'm going to make this one darker and skinnier. Now I'm seeing this over here. Actually, I'll just circle it right there. Now I'm seeing this as a possible reverse flag. So the fact that this pattern failed, and and it's not surprising, guys, because remember, 50 well below the 200, we don't expect those really great bullish outcomes to happen, and it certainly didn't here, and it lost support in the shorter term. And if you look in the thumbnail, it seems like that almost is overhead resistance right now as well. So I'm not liking it. Obviously, the PMO is looking pretty ugly as well. So mark that with blue.
Okay. And CCG is the next one.
Yes, CGC is the popular one in the group. So let me go ahead and I'm going to save this. Okay, and then, yes, so CGC is next because that was the most popular in the chat room. Now this one you can see we did get that flag to execute. So I'm going to, again, I'll mark the flag for you. Get rid of the arrows. So there is your flagpole. Here is your flag itself right in here. And now we've gotten the breakout, and that tells me that this is a flag. I mean, it could fail, but you're supposed to expect, as far as the minimum upside target or measured move, about the height of this particular pattern. And that would give us, wow, 25 to about 45. That's a $20 move. That would put us at 67. It would certainly get us to the all-time highs. So at this point, given that it looks pretty good here with that flag, I'm going to say that I am bullish on this one. If you're holding it, I'd certainly continue to hold it. If you're not, this one is still kind of volatile, but we do have a 50 the 50 is above the 200. We've got an intermediate term trend model buy signal. The PMO is rising and not overbought. So, I mean, you could get into this. I'd probably wait for, hopefully, you get a pullback after an 8.5% move to the upside, but one never knows. All right, next one.
That would be BLL, Ball Corp.
Oh, ball. All righty. Nice breakout from overhead resistance. Let's go ahead and annotate this one here. So here's the resistance we had at $51. And yesterday we got the move, the intraday move above that, but we closed below it. And now we've closed up higher. And look at what a nice rising trend we have here. I think my only concern with it at this point would be the fact that it's rather steep uphill here. That rising bottoms trend line is pretty steep, and that's going to be hard to hold on to. It's managed to, though, for most of 2019, though. We did get an intermediate term trend model buy signal all the way back here in January, looks like, this month. And it continued higher. So we could see it to continue to move higher. I would probably wait just for a pullback to that $51 level. But at the same time, I mean, this one looks pretty good right now. All righty. Next up
is the SLV, the iShares Silver Trust.
All right. And I will let you know, full disclosure, that I do own this one. So I'm very happy today. I was getting a little bit concerned, though. I've been in it. That's been my hiding place. I pretty much, I think I'm about, last time I looked, I think I'm about 70% cash. But I have inched into the water with some metals, and silver is one of them, as well as gold, a couple miners, gold miners, and just honestly the XLP and XLU, because I'm still defensive right now. I don't think I'm still waiting for that decline. And well, there you go. Now, the reason I was really questioning this, let me get into the annotation, was right here. We had the PMO top. Oops, that's not what I want. We want this. So when we had that, I need to get rid of this now somehow. Let's see. No. Alrighty. Okay. So you can see right about the top here, we started to see a top in the PMO. And so I will admit I've been watching this a lot more closely since I got that top and the sell signal. And the same for gold. It's been overbought. The PMO has been overbought. But one thing that I can tell you is that if we're in an uptrend, or if you're in a strong move to the upside, the PMO can still move down to get out of overbought territory. It it doesn't need to be a big downside move either. A lot of times consolidation will get it to turn, and that's what happened here. The PMO started to turn on that consolidation. So I'm still in. I'm watching this level though, 1475. If we get above it, I'll feel a lot better. If we come down here and fail at that 20 and 200, then yeah, I'm likely going to be out at that point. All right, next up.
It's AMD.
All right.
Applied Materials. Oh, Advanced Micro.
Advanced Micro. All right. Hasn't been doing much, has it? I'm not liking. I mean, the chart is kind of blue. Okay, that. I always get ahead of myself on the annotation tool. Okay. And I want this. All right. So, honestly, it's been in kind of a trading range since November, and we're now at the top of that range. The PMO is rising and it's now in positive territory. So I would trust a breakout, but we don't have a breakout yet. And so I would be a little concerned about it trying to make a move down to at least the short-term support level here at the 200-day EMA or the $19 level. So we may see a little bit of a pullback here, but if we get a breakout right now, that would be kind of my clue. But then you do have to worry about this area of overhead resistance from that December top, and that's at 24. So to me, it seems like there's a lot of headwinds. It's also in the technology area. So, I mean, for me personally, I would not be going this direction. Maybe in the short term, it would be a good trade, but intermediate term, I just see too much sideways movement.
And they are due to report next week, just a sidebar.
Oh, yes. So see how that goes. Next up.
HEES.
All right, H&E equipment. Commercial vehicles and industrial. Okay, let's get that annotation tool out. I'm going to do this. I'm going to make it opaque. And we're seeing a lot of flags right now. Let's see if we can get that. There we go. I need a little darker though. That's a bit better. Maybe I'll just make it a little bit more dark. There we go. Okay. So I see these flags. There's a lot of flags here, but I'm also noting a difference on some of these is that we just recently got that 20-50-day EMA positive crossover. You look at this, right, and you think that we have a very overbought PMO. And, maybe it is, maybe it isn't. How do we find out? Well, I'm going to close this up with those annotations and just very quickly show you how I do it. I move it out to like 6-7 years and update it. And then you can see the range of where it normally is or isn't. And, it is kind of in this, I would say the somewhat overbought. The extreme would be around 10 or just above it. So it could still go higher. It's certainly not out of the question. So next up.
NGL.
NGL. All right, our only energy request, if I recall. Okay, I see some overhead resistance here. Skinny that out. All right. Okay, so this lines up back here with the top back from 2017. More important to me is this here. Actually, I should mark it for you. That top, and honestly, this short-term top. Those are the ones that concern me as far as overhead resistance. And you can see that top, we couldn't get above that intraday high back from November. We still have some opportunity here. I'm going to select this. For those of you who aren't familiar, if you get the selection tool and you select the item and push the, I know it's the command key for an Apple, and hold it down, you can just get another version of it here. And I'm going to do one more of these here. So there's a lot of different levels. And again, that honestly, that kind of will deter me a lot of times if there's just a lot of levels of resistance. It's like a headwind to me. You kind of have to continue to leapfrog over areas that have posed a problem. The PMO is rising, so that's good. It is not really overbought. So I would expect a breakout here. That would be my expectation. However, the 50 is below the 200. We got the intermediate term trend model buy signal. But I would just be a little cautious on this. The breakout, I would expect it. If we get it, you'll probably get a nice little move up into this range in that $12.50 to $13 range, which is a pretty nice move there. But again, I'm more of an intermediate term trader, and that's just too many areas of overhead resistance for me. Next up
is NHI.
Alrighty. National Health. Well, this one's up against some resistance, isn't it? But I have to say the good thing here is that it's in the real estate sector, and that sector tends to be strong when things are going the wrong way for the market. I mean, look at what's been happening since the start of the year. It's been a nice move to the upside, pretty much continuing that rising trend. We do have some overhead resistance to face now. And so far today, the intraday high has not even been able to, test it. But I like the PMO buy signal. Here are the things I like. Number one, I like that buy signal. And number two, I like the EMA configuration here. You've got that buy signal in there for the intermediate term trend model. And like I said, I like the space. So I'm expecting the upside breakout. 50 is above the 200. That's a good thing to, you can make those positive expectations. All right, I know we're getting low on time.
AWK.
AWK, so I'm going to be really quick about these, promise. All right, this is in the utilities area, which I also like, and I actually have some of XLU right now as well. I think everybody can tell my stance just based on the kind of things that I'm owning right now. We are at some overhead resistance, and it's just not making the breakout. But there's all of these good things. There's the intermediate term trend model buy signal. There's the PMO. And I'm looking real quick here. I'll write that in. The OBV is starting to make new highs. And so I think that's positive too. All right, next up
is TMHC.
And I think that's last. So
it is.
Woo-woo. Then we'll get into some Q&A. All right, this one's very interesting to me. And really the main reason why, the first thing I note is the what I call a bull kiss on the signal line for the PMO. It came down, got a little bit of a fake out, kind of a bear trap there. And it's moved up, though. It stayed above the signal line, and bottoms above the signal line I take as very positive. You can see the lower range of the PMO is past -5. So a reading of 2.5 is not overbought on the positive side. We could still see that PMO move higher. Where's our resistance level? All right, it's clearly right here. It lines up with those bottoms over here. And it also lines up, of course, with this top. And fancy that, it also lines up with the 200-day EMA. This is going to be a strong area of resistance. I think I have Beazer Homes, so I'm in this particular area of home construction. And I was about to get out, but the one I'm in actually touched that 20 and then started to make its way back up. So I'm still in it, but I am also aware of some very strong overhead resistance coming up. All right, that concludes the 10 in 10, and here are the symbols that we just went over. And I will get those up. Since I'm the one who just did them, I should have them up right away after the show. So no worries there. Let's go ahead and get ready for our final market update. Let's see what the market's been up to while we've been having fun, Mary Ellen.
That's right. Is it still humming
Yeah, it
along here?
still looks pretty good here. I mean, we're still looking at rising prices, at least on the positive side. I'm seeing what we need to see here. Uh, I mean, we're looking at moves. We're not above 1% moves to the upside, except for the NASDAQ. And you can see it's not pulling back quite as hard as the Dow is. The Dow's definitely come back down, and now it's testing that gap support from earlier today. Russell 2000, small caps look pretty good. Mid caps look good. I like the big moves up in the morning. And although we're not moving higher at this point, we're only moving sideways. And when I look at what's going on with the Dow and I look at some of the issues we're having here with the S&P, I think it's very positive that we haven't lost any ground really on the Russell 2000 and the S&P 500. I mean, Russell 2000 is up almost 1.25%. Treasury yields are still higher, although pulling back slightly. We've got, I'm sorry, the TNX is rising. It was the TSX, the Canadian markets. I'm sorry about that, guys. It's also rising, but it's starting to make a move back down like the Dow is right now. So still on the positive side, still up, 0.86%. So I'm not too concerned about that. You shouldn't be. Treasury yields are up today, currently reading 2.755. VIX continues to be on the low side today, right about that 17.5 range. UUP, big gap down, seems to have found the intraday low at about 25.45. Gold, of course, which has a reverse correlation with UUP, did the opposite, big gap up, making the move to the upside, pulling back just slightly. USO continuing its rising trend that started on the 23rd and looking pretty good. I mean, as long as that rising trend is holding, I'll feel pretty good about oil. And you can see TLT bonds, big gap down, seems to have found its intraday low and could be forming what looks like a double bottom, and we could see closure of that gap that we just got. That's all I have for our final market update. Let's just move right on into those questions and answers. I think that would be excellent. All right, so I managed to compile some that we had gotten, from some previous shows. And so I thought I would go over a couple of those. I know that there are some coming into the chat room, and we will try to get to some of those. But I can't promise. There are lots of questions we have to answer. But I'm going to take a few of these, because the first two, Mary Ellen, because
Sure.
I'm I don't want to say the expert, but I have been using stock charts, so I can give people a pretty good idea. The first question was, how do you set up a commentator's chart style? Well, there are a couple ways to do this. Number one is if you just go to whatever stock you want to look at. And if you want sort of our basic, the blogger's basic chart styles, under chart styles, you can actually come down here, the predefined ones, and you'll find our names in here, and you can get our chart styles. So for example, here's John Murphy's chart style. And if you like it and you want to keep it, under chart styles, just say add new, and then you can call it whatever you want. But remember, this one is a predefined, so it's always going to be there, just like this. But if you want to, maybe make it bigger, or, whatever you want to do, add new, and you can keep it that way. The other way to do it, and one way that I recommend, because Tom does this relative chart that everybody just loves. And so the way you can do that, one is going to the Market Watchers Live recap and going all the way down to the bottom. And you can go in here and have a sample of what Tom's chart style is. And I hope this link's not working. I'm going to fix that for you. But you can go to, let's look at the Market Watchers Live chart list, because I know we've got some in there. All right, so here are the ones we have. Let's see if you want this chart style and you like Tom's, click on the chart, bring it up, go down to chart styles, add new, and then that's how you'll get exactly what you're seeing on the screen. Works the same way if you see one in a blog that you like. That's how you would do it. So here we go. I don't see any of his relative charts right now, but when you see it, if you want it, that's how you can do it. And I'm going to update all of those links at the bottom of the Market Watchers recap, and that'll help you get to some of the information. And it really does lead right into how to find my PMO scans. There's a couple of ways. The easiest way is going into one of our blogs, going all the way down to the bottom, and Erin's PMO scan. And that takes you to my main article with my general PMO scan. Now, I have done other articles with the other PMO scans. Just go to that little magnifying glass up there, type PMO scan, and then you'll find all kinds in here. So you can just pick the Erin Heim from my old name, or Erin Swenlin, however you want to do it, and then do go, and it should bring you, go to, yes, blog articles, and you should be able to find some scans that way. And actually you need to have it like this, because that's what you want exactly in there. Alrighty. So anyway, you should be able to find that way. There you go. So a lot of the PMO scans obviously are in those links to on Market Watchers, but you should be able to find some of those in there that are by me. So that were the first two. So Mary Ellen, actually, I'm gonna give my opinion, but the next question is about those upgrades and downgrades. Do you have an opinion about analysts' sincerity or the timing of them? My answer is, based on the charts, when I see them, I do think that in some cases they are a little bit contrived, that there's a reason that they're putting them out there to give them a spotlight. I don't know necessarily what those reasons are, but I think sometimes that's the case. Maybe not all of the time, but a lot of times you get these upgrades, and I look at the chart, and viewers will admit, why in the heck is that being upgraded? What's your opinion? You're kind of in that side of things. You've seen it.
Yeah, so of course I did work on Wall Street, and then very closely with a lot of research teams with a lot of these companies that are putting these upgrades and downgrades out there. I would put validity to what you're seeing. Whether I agree with their upgrade or downgrade is another question, but two factors in play here. One is several of the firms I work with, they have teams of research analysts who are actually at the end of the year, their performance relative to the S&P, they are going to be remunerated, their bonuses. So they have a lot on the line, certainly there, as far as making sure that they are doing their work and putting out good numbers. Also, each year there is Institutional Investor Magazine puts out a ranking, not only the top firm as far as research and their upgrades, downgrades, recommendations, but also individual analysts. So there's enough writing on there and enough eyes that are watching performance that I would argue these guys are doing their best, in their best interest, to put their best work out.
Yeah. Okay. Excellent. I knew that was a good question to ask you, because I know you came up in this business from that side, and I came up through the educational TA side. So I think it does make a pretty good team, the two of them.
Absolutely.
All right. The next question: do you consider high volatility times as more likely being turning points in sector rotation? My answer is yes, but not all the time. Usually in high volatility times, like we've been going through, when you go through corrections, or anytime the VIX starts to just go crazy, I usually stay away, because it's just generally, and I know Tom feels the same way, when you start seeing a lot of high volatility, I tend to see on sector rotation, you tend to see the defensive sectors making the lead. So for example, if we look back here, what sectors were leading over the past, let's see, 3 months or so. There we go. We've had a lot of volatility. And what's going on? I mean, we're seeing a lot of these defensive sectors near the top. Although, look at staples. That's a highly defensive sector, and it has not really performed the way you would expect. So I would say yes, in that when people are kind of concerned, I usually see those defensive sectors. Your turn. What do you think?
Oh, yay. Okay, yeah. So I'm sorry, I didn't know if you had further elaboration there, but
Oh, no.
as far as volatility relative to sector rotation, let's take a look at what volatility is telling us. And in essence, it's the fear index. It's telling you that there's uncertainty, unresolved issues out there that have investors concerned. So I wouldn't say that it's indicative of a clear-cut sector rotation. In fact, I went back, I looked at the turn last year into consumer stocks. I looked at the move. I see sector rotation much more driven by actual facts. So you're seeing, let's say, consumer discretionaries last year. It was all about numbers, earnings, these retailers coming in, consumer confidence. It's going to be those types of factors that are not only going to give you the sector rotation, but provide the wind behind it to keep that rotation in play. We've seen it with energy. It's going to be primarily about oil prices, also about supply demand issues, OPEC. It's going to be bigger issues like that that are going to drive a sector either up or down. You may see a little volatility here or there going into it, but I don't see it as an indicator or a predictive indicator.
All right. I see a quick question here. I'm just going to answer quick. It says, what is the best way to learn about the PMO? Chart school. That is the best way to learn about the PMO. And then the second thing is add it to your charts and watch it. And then you'll learn about it. That's just really how you'll get that. So just a quickie I'd throw in there. All right. The next one I'm going to give you, let's see. What's up next? So what criteria do you use, Mary Ellen, to identify your hot sectors or industries?
Well, for me, this is on a week by week basis. I have a weekly report that I actually biweekly for those that are clients, and that reviews hot and not, but it's with an eye toward a bigger picture, longer term. But for this today, what we did today and going forward, it is very much each week. So what's hot this week? And a lot of the driver there, of course, is going to be price percent increase and how much is it up for the week, and then also looking for themes within that. And oftentimes that will occur where you'll see a company come in with strong earnings, it'll pop. You'll see sympathy stocks rally with it as analysts not only upgrade that company, but also others, given the maybe management announces dynamics that are propelling growth. So I'm taking a long time, but the point is primarily price. That's
Okay.
going to be, yeah.
Yeah, I think it all comes down to price. I mean, really,
for the weekly, yeah.
Yeah. I mean, we have all our indicators, and a lot of them are based on price, our moving averages, etc.
You bet. You bet.
All right. What is the meaning or implications of gaps? Are they good for long term? All right. This is a complicated question because there are a lot of different gaps. And they all have a different meaning. And unfortunately, most of the time, you don't know which kind of gap it is until something happens to tell you if it's a breakaway or a runaway or an exhaustion. So I have to tell you that, I would say that maybe they're good for the long term, but it really is chart dependent. So what was one that we had a gap on? I think we did on AbbVie. Yeah, okay. So this gap, it's coming after, it's a big giant breakdown. I would look at that gap as a possible breakaway gap, meaning expect more downside. However, maybe it's a exhaustion gap. Maybe it's setting up an island. I would check the rest of my chart. I don't see a reversal here. I've got some pretty ugly indicators. We got high volume on this move. I would not expect to see an island here, meaning it would close that gap almost immediately. So I know the question is also, we've got the gap today on the S&P, and, so the question is this good for the longer term or the intermediate term? I mean, what say you? But I would recommend that you go into chart school because I know we have a lot of information about gaps. Also, Thomas Bulkowski, we have the book in the stock chart store. He has an excellent book in the store, Visual Guide to Basic Chart Patterns. Can't recommend it highly enough. All right, we got a few more minutes here. So what's your opinion on?
Yeah, so let's go ahead and take a look. I don't know if you want to pull up the ticker.
Sure.
Take a look at XLNX, and this is going to be a good example of typical stocks. And from my work, it's a very, very bullish signal, these gaps up. So we can see yesterday the stock's price gapped up in response to very strong earnings. And oftentimes people, investors, will think that the move is over. And more often than not, it's not. We can see, of course, we're in a pretty dynamic period in the markets. It is trading up again today. But we can go back historically and look at other times when XLNX gapped up on earnings. So around toward the end of October. I don't know if you can see it, super, a little more to the right, and right above the pink line. And we can see that gap up on that day. They reported earnings on October 24th. So not as dynamic as today, but take a look. So the stock gapped up in price, pulled back to that green simple moving average line. And you can see that it was very much, this is November, the markets were in a very tough period, but the stock did advance. Take a look at that December peak in price after that gap up. So that gap up is particularly when it's on volume and it's on news. This was earnings. Oftentimes the stock will trade higher, such as it's doing today. Other times it will consolidate and then trade higher as analysts continue to review the company, the dynamics, they continue to raise estimates. And you can go back to July 25th, very similar dynamic, that gap up at the end of July. And that was earnings driven. And again, the stock had about a 2-week period of consolidation, but take a look, it did trade higher beyond that. This is all earnings driven. Analysts, again, go in, dig in, review the company, keep raising their estimates higher, and the stock will advance from there. I don't know how much time. We can do this another time because I have some gap down examples as well.
Well, we could do one. I think we have just enough time.
Well, we can take a look at Estee Lauder, EL. This is a stock that also, a lot of times earnings will be your driver as far as gaps up or down. And so we can go back to the end of April.
Take it out because it's really confusing.
Yeah, so if you go back to the end of April, and this is going to be a gap down that's also earnings related, can you see that right there? And so it looked lost. Estee Lauder came out with numbers, they disappointed. There was uncertainty about the future, but take a look at this wedging up that occurred subsequent to that. And so this is where, again, analysts, individuals are going in, they're doing the work. Maybe it wasn't that bad. So you can, and Best Buy, there are a number of them that have these gaps down, but oftentimes they will have this wedging type of recovery process. So it's the kind of thing where in order for you to capture this, you would have certain technical indicators, daily, intraday charts to guide you.
There's an island right there too.
Yeah.
All right, well, we need to wrap this up. It has been absolutely a pleasure to have you today, Mary Ellen.
Oh, it's been wonderful. Thank you.
Yes, and just a helpful hint, everybody, we are in development for our own show together. So we're still working on that, but it's going to happen. Here are the questions and answers. I'll have those in the recap. But wow, time to go. I want to thank all of you for being with us here today. Please remember to complete that survey as you exit. It's down below the viewer, because we love to get that feedback. Market Watchers Live airs 5 days a week, Mondays through Fridays, noon to 1:30 p.m. Eastern. Have a great afternoon, everyone, and we'll see you back here on Monday for Monday Setups. Happy trading.
Is your portfolio positioned to profit from continued market volatility in 2019? Join over 100 investing and trading experts, including policy guru Steve Forbes, emerging markets icon Mark Mobius, America's best income investor Bruce Johnstone, elite energy analysis Stephen Schork, and trading visionary Tom Sosnoff at the Money Show Orlando to get the best ideas for protecting and growing your investment portfolio during 250 in-depth presentations. Claim your free pass now at orlandomoneyshow.com.